The troublesome September arrives for American stock markets. Wondering why it's troublesome? We'll discuss it in this video. Let's get started. Monthly analysis of stock markets is actually an old tradition. Reviewing their monthly performance, how they fared this month compared to others, and how they've performed in various months over the years. These are all periodic analyses that statisticians tend to favor. When we evaluate American stock markets, particularly the S&P 500 index, dating back to 1960, we notice something interesting. When we look at the performance, specifically during the month of September, it becomes evident that September has historically been a troublesome month for American markets. As you can see, it has consistently been the worst performing month since 1960. Although there have been occasional rebounds, investing at the beginning of September and closing out at the end has eroded portfolios significantly each year. Therefore, September carries this negative reputation for the American stock market. Similarly, when we examine data from 1928 onwards, various patterns emerge. It might require freezing this chart and taking a closer look, but you'll notice that the performances of different months have been analyzed. From January to December, September stands out as the only month that has never yielded a profit. In other words, September has historically not been a profitable month. It's interesting to note that September sets the stage for the expectations of the last 3 months of the year. The first 2 weeks of September are typically marked by uncertainty, while the market tends to stabilize in the last 2 weeks. If there is selling pressure in the first 2 weeks, followed by a recovery, there is a possibility that the market may recover by the end of the year. However, the crucial point to remember is that September, on average, tends to be negative. Of course, these statistics may not always hold true, and there could be exceptional Septembers. However, we must also consider the significant credit risks in the American banking system. When will the hidden bad debts come to light? Will it be this September? The conditions seem favorable, given the economic climate. Why do we say this? Well, the Federal Reserve's influence is waning. Do they need to raise interest rates, or is inflation genuinely beginning to decline? If we look closely at the Personal Consumption Expenditures (PCE) index, especially the PCE Core Services less Housing inflation rate, it has risen to 4.7% when housing costs are excluded. This represents a significant increase from the previous month's 4.1%. This key indicator suggests that inflation is continuing to rise. Moreover, the recent performance of oil prices may lead to further increases in inflation. We will discuss this in the next video. Additionally, both core and headline inflation may continue to rise, especially starting from August and into September. Disposable personal income has hit rock bottom, indicating that people's purchasing power has significantly diminished. In essence, the United States is facing significant economic challenges. Stagflation appears to be setting in, indicating a new economic wave. What does this mean? Inflation is likely to rear its head again, as some leading indicators suggest. However, the Federal Reserve had been looking to slow down and potentially withdraw by 2024 even as inflation rose. Now, with rising inflation and declining consumer purchasing power, the situation is becoming increasingly complex. Why, you may ask, are stock markets still rising? We have been explaining this for months. There is a disconnect between the markets and reality. For instance, Dollar General Store recently released a report indicating a significant decline in consumer purchasing power among low-income segments of society. Sales and demand have dropped substantially, reflecting a considerable reduction in consumer purchasing power. This is evident in the company's stock price, which has experienced a significant decline. However, there is good news in the form of favorable unemployment data. While the expectations were for 170,000 job additions on Friday, the actual number was 187,000. Yet, it's strange that all economic data reported in 2023 has been revised downward. So, even though you've seen 187,000, it may drop further in the next 2 months. For instance, June's data was initially reported at 209,000, but it was revised to 185,000 in the subsequent month and further down to 105,000 this month. This shows that economic indicators are fluctuating, and the true state of the economy may be much weaker than it seems. In light of all this data, the United States is facing economic challenges, and signs of stagflation are evident. Inflation appears to be resurfacing, and the Federal Reserve had been planning to slow down and potentially withdraw by 2024. Now, with rising inflation and declining consumer purchasing power, the situation is becoming increasingly complex, especially for retail companies whose recent financial reports have been overwhelmingly negative. So, why are stock markets still rising? They are being manipulated based on established perceptions. However, every cycle has its end, and the end of this cycle may be approaching. Technically, especially with the monthly candle forming a hanging man pattern in the NASDAQ, there's a possibility of a negative start in the next month. This pattern often leads to further declines in the following month. Although next week is Labor Day, and markets tend to be influenced by holidays, if September starts with calmness and a downward trend, the negative prediction for September could indeed prove accurate. Now, let's take a quick look at the charts. In the NASDAQ, I'm examining the very short term this time because last week was the lowest volume week of the year due to the August month end. You can see the green candles, indicating a recovery, but a small reversal candle occurred on Friday. We are still above the 15,244 trend following level, so unless that's breached, it doesn't necessarily signal a reversal. However, there are some signs of a potential reversal, so it might be wise to watch from the sidelines, possibly with a stop above the recent high, for potential short trades. I made a few attempts this week, stopped out once, but managed some trades afterward. However, I continue to lean toward the short side but emphasize that it's risky, especially since we are technically still above 15,244, indicating an ongoing upward trend. A significant move to new all-time highs is still possible, which could target the 16,007 range. Nonetheless, I believe that the primary move may be nearing its end, and the current rally may be the final push before a potential conclusion in this range. I still don't believe in the sustainability of this move for the long term. If the upward movement continues beyond September, then we can consider a potential continuation of this rally, but I remain skeptical about its longevity. Now, let's focus on the short term, particularly the 15,244 level, and keep an eye on daily closings below it, as a definitive breakdown would indicate a significant shift in the market. In the S&P 500, our trend following level at 4,505 closed at 45.15. Let's take a look at the weekly chart. It broke below the trend support and tested it, potentially indicating a reversal if that level isn't breached. In fact, this uptrend may have come to an end unless 45.05 is surpassed. However, to be clear, our short-term trend following level remains positive above 45.05, and we will continue to monitor the negative aspects below it. Dow Jones, as usual, displayed a sideways movement. Looking at the weekly chart, the trend following level at 35,070 didn't show much activity for the rest of the week. In fact, Thursday and Friday appeared negative, particularly due to the evaluation of the global dollar in the week's final video. Friday saw a sharp rise, which is often considered a sign of a reversal. Apple, the chart of the world's largest company, shows that it reached $184, breaking our trend following level. It had a strong downward move into the $180 and $190, followed by a sharp rebound. However, it couldn't close that gap, and we are now very close to the $190.60 gap. If that gap is closed, it could officially mark a continuation of the downtrend. Nevertheless, we are positive above our trend following level of $184. There's some news related to Tesla, as they have announced price reductions in China, continuing their trend of lowering prices worldwide. Price competition has intensified, especially in China, where various companies are now selling more cars than Tesla. This is because economic troubles have diminished purchasing power, leading Tesla to continue reducing prices. On Friday, there was significant selling pressure on Tesla's stock. Looking at the technicals, our trend following level for Tesla is at $250, and it closed the week at $245. It can be considered positive above $250, but it is currently in negative territory. There is some news regarding NVDA. You are already aware of NVDA, I assume. They have prohibited their smart chips from entering China. In fact, they didn't want them to enter in the first place. This has sparked a conflict. We consider NVIDIA to have a highly valuable product, those AI chips are in high demand, and everyone is lining up to get their hands on NVIDIA's chips. Strangely, NVIDIA is extending excessive credit to certain companies to purchase their chips, as I mentioned last week. But let's leave that aside for now. However, Biden has banned the export of NVIDIA's chips to China, and this is causing interesting developments, especially in China. As you know, China is a significant buyer of various products worldwide, and one of the products they might have wanted to acquire is NVIDIA's chips. They have now been cut off from that possibility. I am genuinely curious about how they will sustain their growth after having their Asian sales hindered to this extent. Will they be able to rely solely on sales in the United States and Europe? I will be watching closely. From a technical perspective, the stock is trading positively above our $480 trend following level. However, the downside is currently negative. It closed the week at $485. We continue to hold put options on NVIDIA, and we are carrying our put positions into October, November, and December. KOTRA has been under our radar for a while now, and it's a company we find technically appealing. As long as it stays above $27.74, we see a positive trajectory for KOTRA, and we anticipate it could reach historical highs, potentially going as high as $36. Mosaic, the global fertilizer giant, has shown some technical positivity recently. As long as it remains above $38.55, it has provided some positive signals, particularly following the buy recommendation on Friday. However, it's essential to keep a close watch with a tight stop, as market conditions can change, especially with the possibility of natural gas prices rising. Alibaba, a stock we haven't looked at in a while, appears to have some technical positivity. It is currently at $92.11, and our trend-following level is positive above it. There is the potential for an inverse head and shoulders pattern on a longer-term scale, but this is not confirmed yet. If it reverses below $92, it might be wise to set a stop, but if it rises above, it's worth monitoring. Alibaba has the potential to benefit from its expansion in China, but global economic issues, particularly in the West, could impact its growth. Therefore, we will closely follow how Alibaba manages its growth, particularly after facing challenges for some time. Now, in the world of cryptocurrencies, there's an interesting development involving BlackRock's entry into the cryptocurrency industry. BlackRock has applied for an ETF and is trying to establish a fund in this space. Additionally, BlackRock has become a major shareholder in 4 out of the 5 largest Bitcoin miners, essentially taking control of these companies. Their CEO, Larry Fink, made a noteworthy statement last week, suggesting that cryptocurrencies, particularly Bitcoin, can serve as a means to protect your wealth against inflation. This is a significant shift from his 2010 statement, when he viewed Bitcoin as a currency used for money laundering. While our perspective on Bitcoin has always been positive, this shift in perspective from influential institutions like BlackRock can have a significant impact on the cryptocurrency market. It may lead to potential manipulation as more ETFs are established, similar to what we've seen with gold and silver in the past. Last week, the Grayscale case was brought to court, and this case has now concluded. However, as is generally the case with such legal proceedings, we have begun to witness retracements, especially as we saw with Ripple. Personally, it didn't make much sense to me, and as expected, it retraced. In fact, it even dropped to lower levels, going from around $26,000 to $28,000 and then retracing back to the $25,000 level. The current outlook for Bitcoin is not something I particularly favor. Still, if we stay below the $26,666 trend following level, we may shift from negative to positive sentiment. However, we need to be cautious as we see the formation of a right shoulder, and unless Bitcoin manages to establish and hold above the $26,666 level, for now, it seems to be heading towards new lows, at least with a high likelihood of breaking below $25,000. Ethereum is showing a similar pattern. It's below my trend-following level of $1,678, and my sentiment remains negative. For Ripple, with a trend-following level of 51 cents, my sentiment is negative as long as it stays below that level. Technically, most cryptocurrencies are encountering some issues. We will reassess the situation at the beginning of the week. In these turbulent times, I will continue to provide guidance to navigate your path. I wish all of you great caution and profitable days ahead.